Everybody, welcome to the Founders Podcast. Today we have a very special guest, Carter Smith. Carter is the founder of Pool, a real estate investment platform that connects all the real estate investing companies into one clean platform, making the Expedia of investing in real estate. Carter, welcome to the show.
Thank you for having me, Jasper. Excited to be here.
Of course, thank you for coming. Tell me a little bit about Pool.
Yeah, so like you said, we're connecting investors to real estate investments. Real estate's been a very highly perceived, highly desirable asset as well. Uh, for a lot of Americans, it's consistently been ranked as the number one investment, um, for the greater of the last decade. And so more and more companies are working to kind of democratize access to this asset and allow investors to get started. So we're really specializing in this industry called real estate crowdfunding or fractional real estate. Essentially, you can go on these websites and platforms where companies are going and finding different ways to invest in real estate and offering up for investors to invest in a piece of it. So similar to how you invest in stocks and bonds, you're just buying a share of that investment property. As that property generates income from tenants being, paying their rent, you receive a portion of that dividend, proportionate to how much you invested. And as the property appreciates, similar to how all of real estate kind of appreciates over time, your investment will then increase in share. And if there's a liquidation event or the company decides to sell or it's the best time to sell, you'll receive back your investment plus your appreciation. And yeah, that's kind of like the overview of how our whole process works. Essentially, we're not doing any of that ourselves. We're not going out finding any investments. We're not part of the making it, offering any of it or managing any of the property, any of that. We're just the ones who are collecting all the information from all these companies that do it and helping investors understand how it all works, how the fees work, the differences between the investments, because there's a bunch of different ways they're being offered, and kind of really simplifying the whole process for them. So that's where we sit. That can be kind of confusing for some people because they might think that we're actually the ones finding investments for them, but in reality, we're just kind of like you said, the Expedia, just bringing the menu so that investors are more informed and are able to have a better decision when they invest.
Yeah. Okay. So basically, you're giving people a chance to buy pieces of investments rather than buying a whole property themselves. And these companies that are doing that, you're really just bringing them together into one place.
Yep, exactly.
All right.
Pretty simple when you break it down like that. Not a very innovative product or anything like that. Just combining aspects of different industries and applying them to this one. And through the various customers I've talked to and people have the research I've done in the industry, I've seen a lot of people who are struggling to trust some of these platforms or don't really know how it all works. So instead, they don't really look to invest because of that distrust or that feeling of like, oh, I don't really know how it works. I don't really know if I want to put significant amount of money into this. So they kind of just pass on it. When in reality, if that decision is made a lot easier and explained to them more, they're a lot less apprehensive and willing to put in some money.
Yeah. Interesting. That's a good point because I don't want to be going from one site to another site and I don't really see reviews or, how reliable these things really are.
hmm
Do you know how big is the fractional real estate investment market?
Based on just industry reports, currently at like 11 billion. Uh, it's growing rapidly. They've got like a compound annual growth rate projected to be like 45% over the next decade.
Wow.
Um, yeah, 2032 is supposed to be like over 300 billion in size. There can be quite a large portion of the future of real estate investment as property values continue to go up. More people get priced out of the market. People are going to be turning to this alternative instead.
That's really cool. And really important to be in a growing market.
Right? Right? Yeah,
Yeah.
it's exciting.
300 billion. And right now it's at 11.
Yep. Yep.
Do you know who's the biggest player in the market?
Definitely this company called Fundrise. I believe you're familiar with it as well. Um,
Yep. That's
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 they
actually how
make
I
it.
got first introduced to fractional real estate investing.
Yep. They make it really simple. They essentially just have one fund. I think they used to do various investments, different kind of funds with different goals. But similar to their name, Fundrise, you're investing in their managed fund of real estate. So they throw different properties they deem, high growth prospects for your investment, and you're just simply part of that fund. It's ongoing, so you can kind of cash in and cash out. Each quarter I think they limit it to. Um, but yeah, the fund is always open, always rolling. So as long as your money's in, you're kind of with the performance of the fund.
That's
So yeah.
that's awesome. So they only got one fund.
Yep.
Sorry, you were saying something?
Yeah, I guess to add on that, they have like last I checked, like almost 400,000 users. I want to say it's like 380 right now, and I think over $7 billion in assets being managed. But they also do have a private credit fund, so more like private lending, and then they also do an innovation fund where they invest in venture startups that are a little more later stage. Like I think they own companies like Anthropic, which does like the Claude AI, companies like
Hmm.
that have been proven out, and they go and invest at those a little bit later stages. But it's still like a venture fund.
That's kind of surprising. So Fundrise is doing that?
Yep, they are.
Okay. Wait, but so the total market is 11 billion and they
Hmm.
have assets under management of 7?
Yeah. So I think the market sizing is different from assets under management. Uh, yeah, if you, I don't know the combined assets under management by all these companies, but that's more of like based on revenue. Um,
Oh, okay. Right. I got another question for you. Why'd you decide to start this company?
Great question. Um, I've always had the entrepreneurial spirit throughout my childhood. Like, 8 years old, people were like, "What do you want to be?" I was like, "An entrepreneur," and I was like, "Oh, that's good for you," and just kind of that was it. And I always knew that I needed some idea to come up with to actually get started, to start building this not investment, building my career and going and actually doing something rather than just saying would be an entrepreneur. And really, what did it is reflecting on what I enjoyed the most or what I enjoyed spending time on, and that led me to in high school I had this business that I just did like handyman jobs for people and would do like small construction projects and help like renovate homes or
Mm.
build out different things. We do landscaping, all that kind of stuff. Pretty much anything you need, I could figure out how to do it or learn how to do it. And that like the time I spent doing that was like nothing. Like I could do it all day and it felt like time was just flying by and I didn't really get bothered and be like, oh, I need to take a break from work. I don't enjoy working. Oh, I'm like not looking forward to work. So I was like, oh, when I mean, maybe real estate's like the way I need to go and look at that. And that's when I thought, what are the issues with real estate? What are some problems I could maybe solve? And I thought about how expensive it is to get started. And that's when I stumbled upon real estate crowdfunding and was just kind of fascinated by the industry. And as I started digging more and more, I was like, wow, there's a ton here. And even for someone like me who's interested in it and like has some kind of background knowledge in real estate, it's a little overwhelming. So I can't imagine for the average person just now, finding out about it, it's got to be incredibly challenging for them to understand really what investments they want to choose.
Oh yeah. Totally.
Yeah, so that's kind of like the backstory behind it all.
I think you're solving a real problem because a lot of people want to invest in real estate. People know that it's a great investment, but a lot of people just don't have the money to go out and buy a whole property. And
Yeah,
then even the people that learn about fractional real estate investing might not trust it when they just go from one site to one site. You really want to see like kind of like a trust pilot, all of them in one place, and you can
yeah,
see that they're actually legitimate and
hmm
compare the returns on each of them.
yeah, yeah. I believe last year the average down payment was like 125 grand, which
Whoa.
sounds insane. I mean, when you think of like luxury cars, you think of that much money, not like buying a house. If you think of like the high-end Mercedes or like buying like even like a looking at Lamborghini, Ferrari, like that you're getting in the $100,000 range. People aren't thinking that when they think of houses, but that's honestly the realistic thing currently is
Yeah,
that it's just
especially on a
really, really
down
expensive.
payment.
Yeah, that's 20%. Average home price is getting over $500,000. So
Wow.
yeah, and that's
Wow.
average. So it just depends on your markets, but yeah,
You know the
across
place
the
where my
U.S.
mom grew up? Her grandpa bought it in Wisconsin, 1,500 bucks.
Yeah, see, that's crazy.
About 100 years ago.
Yeah, well, I mean that makes a lot more sense when you say that, but That's
Yeah.
why people are also so drawn to it. They've seen, the generational wealth that's been created through real estate, and they are like feel like they're missing out. There's just not been a way to really do it easily until these companies started popping up. It's all because of legislation change about 10 years ago, but since then it's really exploded in popularity. Still not,
Mm.
as familiar as, opening up a stock investment portfolio, but
Yeah.
you got to believe as more and more people get understanding of it and use it more, move in that direction.
hmm I think there's like a stat on less young people buying homes now.
Yes, yes, definitely the more market or more renters market for the future, I think.
Yeah. Are you a fractional real estate investor yourself?
Of course, you have to test out the offerings to understand really how it works if you're going to be educating people and you know helping them teach them about the market. So yeah, I think I'm invested in at least five of different platforms. The one barrier I have is I'm not accredited, so I can't. Some of the platforms are only tailored for accredited investors. So I would have to go get
Wow.
a license or make a lot more money than I currently do to even log in or view their investments.
Wow, that's okay, that's interesting. What are
Mhm.
the requirements to be an accredited investor?
You have to make either yourself $200,000 or as a household $300,000, or have over $1 million in assets outside of your primary home, or you
Wow.
can be licensed in. I want to say it's the Series 7 or Series 65. It's essentially like securities exams for more professional investors, like people who work at banks and financial advisors, wealth managers, those who understand how investments operate. Uh,
That's
so they get a
right.
lot more educated on the topic.
Yeah. My dad had a Series 7. So, that's really interesting that some of these you need to be an accredited investor for. Did you see on the All In podcast, Jason Calacanis talking about sort of a proposal to reduce the requirements to be an accredited investor?
I honestly did not. Still haven't watched. Was that the most recent episode?
I think it was 2 episodes ago.
Oh, okay.
I think it was March 2nd or something. Um,
Interesting. I don't specifically remember that, but
yeah.
I have heard a few rumblings of that, of people wanting to reduce it. Yeah.
Yeah. I mean, he was basically saying like, look, everyone should be able to invest in sort of these big private equity companies like a Stripe or SpaceX or these fractional real estate firms that you just mentioned. Like,
Hmm.
do you think that somebody needs serious like expertise and $1 million out of the equity of their home to invest in fractional real estate?
Um, that's a really tough question.
Like, how
I
educated do you think someone needs to be? Or do you think that anyone with like a basic education can go and invest in fractional real estate?
I think under certain situations, yes. I understand why the limitations are in place, just because of the amount of money required. And so, yeah, I think there should be a way to circumvent it other than having these professional licenses or a substantial amount of money. I personally feel the frustration for me trying to invest in them, and it just can't do that right now. But for these companies that are offering them, you have to look at their point of view of some of these platforms. A minimum investment is $25,000, and that's just unrealistic for someone who's not making a substantial amount of wealth or has that much wealth to invest. Um, and that's done strategically to not have to deal with as many limited partners in these deals. Like essentially, when you invest your limited partner,
Hmm.
um, they can have a higher level of communication with their investors rather than quarterly they'll send out uh, what's the word they'll send out the performance reports or
Yeah.
their income statements, etc. Basically, just communicate with their investors how the investment's performing. And if you have a high number of unaccredited investors, you kind of have to simplify the terminology, help them understand more like the different metrics they're tracking, rather than with accredited investors, they usually come with a higher understanding of what's actually going on. Um,
Right.
so there's a few reasons I think why it exists, and more the protection of like a person who makes less than $100,000 probably shouldn't be putting 25, 30, 40, 50 grand into just one investment. And it's kind of like a gamble at that point. Like if half of your yearly income is going into one investment, the key is diversification. So,
Yep. You got to learn about diversification. But
right.
that's why I liked Jason's idea so much because he was saying, look, if you give everyone a 5-hour course and you teach them about, what an ROI is and what diversification is
Hmm.
and how it works, then you can have more people sort of get access to these special investments. Um,
Yeah, I definitely agree. 100%.
yeah. And that's also a great point about like some of these platforms got a 25,000 minimum investment. So people should know like not to put all your eggs in one basket,
Right.
um, and diversify across many investments. Um,
Yeah. I think you bring up a good point with the education piece, and that can we've thought about it on our team of a future, you know, option for Pool of being that group that puts together the course. Um, I don't know if you're familiar with another company called Dorio, which does a similar thing for venture, is that they have a course with a test at the end to make you a sophisticated investor, and that allows you access to a certain amount of deals to invest in the venture space. So we could kind of duplicate that for real estate and educate people on how real estate investments operate, what are the things they need to know, and at the end, if they pass the course or the test, they can get higher access to some of these deals. So that's definitely something we've thought about and looked at getting into, as we build out our platform and establish ourselves in the space.
yeah, yeah, I think that's an awesome idea, having your own course. By the way, real quick, what was the name of the company that you mentioned?
Dorio. It's
Dorio.
a Yeah. One of my professors is the founder of it. His name's Jerry Hayes. He has been teaching venture for years and also has or successfully started I think 5 or 6 companies now. Um, so he's just putting together a lot of his knowledge and expertise and a lot of other professional venture capitalists knowledge to bring on, like, I think they do like cohorts of groups to do the course together, and then at the end you take an exam, and that pass fail determines if you are become a sophisticated investor or not.
Hmm. How do you spell it real quick? Just because I'm trying to find it online.
Oh yeah, Doriot.
Ah, you see,
Mhm.
when I looked it up, I found this Pokemon who's a 5'11", 187-pound bird. So
Wow.
I
I don't
found
remember
it.
I did a
I
lot of
found
Pokemon
it.
back in the day. I don't remember a Dorio, but
I found it. This looks like a cool company.
yeah.
I think I think we left the most important question about pool for last,
Oh boy.
which I want to get a really good answer out of you.
All right.
So
Hit me with it.
we talked about, how the fractional real estate investing market is growing like crazy, and it's expected to reach 300 billion by 2032, and all these other things. I mean, it's pretty obvious that it's a good business, and it's the
Hmm.
time to do it as fractional real estate investing is starting to grow more and more and more.
Yeah.
But yes, why are you the person to build it?
Yeah. That's probably the toughest question to answer, considering I'm a graduating college student with zero experience in the real estate space whatsoever. Um, I think just my drive and the research I've done on it really are the two key things. I mean, no one else is doing it, so it's like someone has to do it, right?
Hmm.
Um, if not me to just start it, someone will either come with a new company that passes or find someone to replace me as a sitting CEO, and I'll be on the management team and they carry the torch as a more professional company. But I just feel like with the drive I have at the time I have to really put a lot of effort into researching all this space and my somewhat professional experience in various real estate and wealth management internships and programs, that I have enough understanding to get things started and teach myself along the way. But also, I feel like it might be helpful that I'm learning it myself, where I can help other people through what I'm learning. and just kind of duplicate what I'm doing for others, because I'm kind of doing it all myself as well. So,
Yeah,
um, it's hard to, tell someone, yeah, I'm the most qualified guy when I have no real estate experience. But I think there's various other factors I could leverage and utilize to overcome that. And I can always hire, real estate experts to advise me and be on my team. And, I just think I have various other angles I could utilize and leverage to, launch this into a successful business.
I like it. I don't think,
Yeah.
well, you don't need 10 years experience to make it work. You are the man for the job.
Yeah. That's the attitude you gotta have, right? You want to make it.
Completely.
Yeah.
All
I'm
right,
curious
so
how are your businesses going?
they're going all right. You can check them out at schneryclothing.com. If you are an investor and would like to invest in real estate, feel free to check out Pool, bringing together all the fractional real estate investing platforms. Carter, you got an Instagram you can shout out?
Yeah, everything is just Invest with Pool. So our domain is investwithpool.com. Instagram is Invest with Pool. Twitter, Invest with Pool. We have a Reddit group. It's r/fractional underscore real estate. We have a newsletter you can find on our website. Um, yeah, and the best way to sign up and keep keep in touch with us is through the newsletter. We'll send weekly updates on the markets and various deals you can invest in, what has been recently released, and give some updates on those. And that's kind of how we're building our waitlist for the actual platform launch, which is getting started very, very soon. So,
Sweet. All right, Carter. Great talking to you. Thank you so much for coming out onto the show.
of course, Jasper, appreciate it. Have you come up with a name yet for the show, or
This was the first episode of the Founders Podcast. So the
the Founders Podcast? Okay,
Founders Podcast is already a thing,
gotcha.
and they have like billionaire guests on. I think I might just take it though.
All right,
Use the
you
same
might,
name and compete.
yeah. Hopefully, they don't try to sue you or get you on trademarking or anything like that.
True.
But
We could call it the Founders Corner or something, or the
yeah,
Founders Roundtable.
it's also like you could do like Founders Fireside Chat or
Oh,
something like
that's
that.
fire. I like that. We're using it. All right, there you
Wow,
go. That's the
simple
name
as
of
that.
the Founders Fireside Chat.
Yeah, because I know fireside chats are really popular. It's supposed to be just like a cozy, calm conversation.
Yep, yep.
Yeah,
Okay, so now for the next episode, I can invite Jack Saltel to the Founders Fireside Chat.
yeah,
Sweet. All right. Thanks a lot for coming on the podcast, Carter.
of course. Anytime. Appreciate you having me on here as the first guest. I feel very honored to earn that privilege. Hopefully, we start a nice little precedent of getting some cool guests, and I'm able to be like, yep, I was the first.
Let's do it. All right.
Oh yeah.
Thanks, Carter.